Hello and welcome everyone to the week ahead commodity report, where we will be reviewing the markets for the week ahead for the 25th to the 29th of June 2018, presented by myself, Phil Carr, at the Gold and Silver Club. So what a difference a week makes. So last week into the close on Friday, we were looking at a significant move to the downside on oil, where it had dropped over 9% over the last 4 weeks. We saw big moves lower on gold, on silver, on copper and platinum, and we're starting to see signs of a turning point now as we go into next week. So first of all, what do you need to know as we go into next week? Well, essentially on Friday, OPEC agreed a modest hike in oil supply after Saudi and Iran compromised. So with that, we have seen that immediately impact the oil market. I'll show you the chart here. As we've mentioned before, OPEC meetings you definitely want to always have in your trading calendar. There are 2 a year, one in June and one in December, and this is why you need to be looking at the OPEC announcements. We've seen a 5% breakout to the upside on crude oil on Friday. We've now re-established long positions on oil, and you can see here the price structure that has just driven higher into the close here, up 5% on the day, 7% over the last week here, the gain that we've seen in WTI crude oil. And we've also seen a breakout above some key levels here. Certainly we've now broken out to 1 month highs here for oil, and in fact if you look at the oil price structure here going back to the last 12 months, we've reclaimed this underlying trend channel which has been in play here for oil over the last year with this breakout and capitulation move on Friday. What I would turn your attention to if you missed the breakout on WTI crude oil is move over to Brent crude oil. Brent crude oil is lagging, but it still had quite a significant move on Friday, up 3% on the day. We've got a fresh buy signal which has now been generated into the close on Friday, and you can see where we've got this bull flag price structure where if we break above the weekly highs going into next week, I'll show you the weekly chart, if we break above the weekly highs and we maintain this overall upward trend, there might be some good follow through here for oil going into next week. We still need a bit more confirmation here for Brent crude oil to really follow through to the upside and break above the weekly highs, but certainly the close here is quite strong for Brent crude oil, and well done to all of you if you caught this breakout also on WTI crude oil on Friday too. That's been a very significant move to the upside. Also on Friday, we now have the commitment of traders data as well, so we can see that hedge funds and money managers have trimmed their net long positions in COMEX gold to the weakest position in 2.5 years, and certainly over this week we have seen gold prices break down to 6-month lows. And of course going into next week, the question is, are we going to see this dip in price get bought back up where we're sitting around 1,268 US dollars per ounce? We're at quite a key level now for gold prices going into next week. Certainly also with oil prices here too, we have seen hedge funds and money managers also cut their net long positions on US crude oil futures over the last week as well, to their lowest in nearly 8 months. Bear in mind that on Friday oil prices broke out 5%. We've seen a capitulation move to the upside, with likely a lot of funds not capitalizing on this move because their net long positions are now at the lowest level they have been since October of last year. It means there's a lot of capital on the sidelines that could go into oil to propel it much higher in the coming months here. So I would definitely keep an eye on crude oil, and we can get a bit of a sense of where we are right now with commodities if we actually go over to the Reuters commodity index here, and you can see here where we've essentially come back down to a major trend channel on the commodity index, which has been in play for the last couple of years here. In fact, if we zoom in slightly here on the chart, you'll see it more evidently where we're actually bouncing as of the close on Friday. And I'll zoom in a little bit further here, and you can see where we've got the potential for commodities to start to bounce from this oversold condition. Certainly last week on Friday, we saw that big sell-off on gold, on silver, on platinum, on oil. We saw most commodities with a lot of pressure to the downside. The US dollar broke out to 11-month highs, and this week we've started to see the US dollar rotate lower into the close on Friday. So if we have a look at the US dollar index here, you'll see on the weekly chart we've got a rejection candle which is formed, and on the daily here we've got the beginning of a sell signal which is developing on the US dollar. We'll see whether we get follow through going into next week. Price structure is indicating that the US dollar could start to roll over more as we go into next week, particularly if we break back below the weekly lows and we start to see momentum pick up to the downside, taking the price back towards the 93 level. That could certainly provide a lot more support to a number of commodities which are priced in US dollars, and typically when the dollar starts to correct like this, commodities will get well supported. So if you have a look again at the commodity index here, you've got this V-shaped reversal bounce which is starting to occur, and I would suggest you really want to take a closer look at some commodities which are trading at very oversold levels. One is platinum. Platinum capitulated into the close on Friday. We do have a fresh long position that we've established now on platinum. You can see here where platinum came all the way back down to the lower Keltner channels last week. We had several retests around 860 US dollars per ounce, and then into the close on Friday. This is where we've really started to see the momentum pick up to the upside. If you have a look at the weekly chart here again, going back to a 2-year zone of support, we've just about retraced and closed within that 2-year channel again here. And if we see more follow through going into next week, again, we could see a very good risk to reward for more upside in the following months if we start to see a bottom form here for a number of commodities. So I would certainly have platinum on the radar as we go into next week. It's currently into the close trading at 877 US dollars per ounce. Now moving over to copper, as mentioned on last week's week ahead commodity report, we have continued to take advantage of this weakness on copper. It's actually been our third position that we've taken since the FOMC statement for the sell short side here, and we've essentially taken copper all the way back down to major support. We are now flat on copper. We no longer have a sell short on this market. We've now banked our profits on copper, and I'll be watching silver as well with respect to where we're poised at the moment, where we're sitting just above $16.40 per ounce into the close on Friday. So to give you a little bit more detail on silver and what we're looking at the moment, we need to go over to the gold to silver ratio. This will help you to pinpoint reversals on silver. So essentially the gold to silver ratio for the most part moves inversely to silver price. And you can see here where we've been breaking down over the last few days. We came into a trend channel resistance here on the gold to silver ratio. We're back at 77 to 1 now, and we've been rolling over certainly over the last couple of weeks here. We've continued to see the price roll over from the highs here of April, where we got all the way back above 82 to 1 with the gold to silver ratio. Since then we have seen the ratio correcting, and the price structure would suggest that going into next week the gold to silver ratio looks vulnerable for a V-shaped reversal breakdown in price, which would marry up with silver forming a low here. So moving back to silver, you can see what a range bound market this is right now. A lot of support coming into silver just above $16 per ounce. We've got a very range bound market here. We've been range bound on silver since February, moving between the ranges of $16 up to $17, and just above that we found resistance at approximately $17.30 per ounce going back to mid-April, and just prior to last week's FOMC statement as well, where we saw silver break out back towards 2-month highs here. So right now we're back in an accumulation zone here for silver. It is still quite oversold, and it's decision point as we go into next week as to whether we will see some additional follow through. Now moving over to gold, as we mentioned on last week's commodity report, gold was vulnerable to more downside. Gold has now hit the levels that we were looking at for the next major targets to the downside, and we're starting to see a reversal come in on Thursday and Friday as well. You'll note where we've bounced right off the lower Keltner channel here for gold, and we've got a rejection candle here on Thursday and a little bit of support coming in around 1,268 US dollars per ounce on Friday, ever so slightly up on the day. Gold is lagging at the moment, so if you have a look at the price structures, particularly of platinum and also with silver right now, gold is lagging, and that's been the case throughout most of these breakouts over May, June. So right now gold is still a little bit vulnerable, but it might just be a really slow and steady move and a recovery here if gold does not take out Thursday's low as we go into next week. The next major levels I would look at for gold that it really needs to hold would be approximately around 1,260 US dollars, which would confirm that likely we've got a short-term low in if we hold that level. If we don't, and if gold breaks back below the monthly pivot here, we could start to make a move back towards certainly the 1250 to 1200 zone. It opens up quite a lot of downside for gold if it can't hold on to the 1250 to 1260 zone. At the moment, the price structure suggests that we might be able to hold on to that if the US dollar rolls over next week and gold gets a bid at this level, which is around 1,268 US dollars per ounce. Price structure wise, the potential for a V-shaped reversal pattern to occur here, because we've had quite a lot of downside, and ideally with gold I wanted to see it hit the lower Keltner channels before we started to see a reversal. So what we could see next week
If it holds this level, is we see a slow move higher here, and if we do get gold start to break back above 1,280 US dollars, we could start to see this gap fill from the recent breakdown in price, and then slowly but surely see a recovery back towards $1,300. If the low is in now. That's a big if, so we have to continue to monitor the price structure next week. But don't take your eye off gold, also of silver and platinum going into next week. If you'd like to find out more about the training services that we provide at the Gold and Silver Club, and also get access to our custom-built market data and news trading platform, there is a link below this video in the description that will give you a 1-month free trial of our custom-built market data and news trading platform. If you would like to join us for our live trading room sessions throughout the week, for more information, just go to www.jointhelivetradingroom.com, and of course, make sure you subscribe to our YouTube channel to be kept updated with the latest commodity reports.